Okay, so let's visit our Monday special, Midcap Mania with Nigel D'Souza. Nigel, what's on your radar today?
Well, Anuj, this week around, what I've really studied is the tiles industry. And in fact, India is the third largest in terms of production as well as in terms of consumption. Now, we've been talking about GST. So as we've been saying in the past as well, a lot of business will come to the organized sector from the unorganized sector. So that as well, that plate should come up for you on the screen. We have seen it play out in the last few years as well. Well, the stock that we're going to focus on is Asian Granito. A lot of people will say, well, we already know so much about the stock. The promoter holding really has been at only around 28%. So I like a company normally where in fact the promoter holding is higher. That's what fundamentals tell you. Now, what's interesting is in the month of March 2017, the promoters had bought close to around 2.5 lakh shares when the stock is at a 52-week high. You've already seen the stock being a big outperformer. So this is something that really stood out, and it's not been highlighted anywhere. So that's one of the reasons why, in fact, this stock did catch my eye. The other big holders really in the company, there are some corporate bodies in there. There are a lot of Patels as well. The promoters are Patels, but we can't really draw any kind of relation between the two. But I confirmed with the management just around an hour back that yes, they have bought in the month of March. The shareholding pattern will be out shortly, and then we can see from 28% where exactly it did go. Now, in terms of peer comparison, the Asian Granito always trades at a bit of a discount in comparison to Kajaria as well as in comparison to Somani. And in terms of their top line, it's not grown that much in the last couple of years, from around 700 crores to around 900 crores approximately. But what really impressed me was the operating profit. So let's get the operating profit up for you. In the first 9 months of this year, it's outdone what it did in the entire of last year. And the margins as well have started improving from around 9% to around 12%. Similar is the case in terms of their profitability as well. In the first 9 months of this year, they've already done around 25 crores. In the entire of last year, they did around 18 crores. And we have the best quarter that's due. Q4 is normally the best. So that number really is going to be very, very interesting. Now, moving on then, just a few months ago, we saw that, in fact, they were going for an amalgamation with artistic ceramics. What that does is it adds close to around 10% of their total capacity. And in addition to that, this particular company gets their gas at a 30% lower than what market rates are. So that could help their margins going ahead as well. Now, if we're just taking a look at their product profile, they've started focusing on higher valued products. So their focus on ceramic tiles, that's been coming in lower, while vitrified tiles as well as marble and quartz, there in fact their share has been going higher. And that's perfectly depicted in their high value products. So you just take a look at the shift. It has been changing in the past couple of years. Also, they have been indicated they're going to be looking at more B2C business, and that's better in terms of realizations as well as in terms of margins. Finally, their working capital has been improving as well. I was looking at their company's website. In fact, there the working capital days have been coming down, and also a whole host of clients that they've indicated to buy from them. So that's really the company. A well-discovered company, but when the promoter is buying really from the open market, that's something that, that really stood out. Back to you.
Okay, Nigel.